A couple things about VA loans just in general that I think everyone should know. You should know that a VA loan has a funding fee. If you are a disabled vet, you do not pay the funding fee. By disabled vet, it could very well be, I have bone spurs, I collect $75 a month in VA disability, you're disabled. For the Department of Veteran Affairs, if you're disabled, you're at a minimum 10%, and then once you're 10% disabled or more, you're not required to pay the VA funding fee. But there's issues like anything, like you'll run into roadblocks trying to get someone COE, and there's times that you have to get their DD-214 or their NG for our Coast Guard friends. Anyhow, the Coast Guard has a different form, not called a DD-214. The discharge paperwork at the Coast Guard is something different. And then you have to send that off. If it's a DD-214, it goes to Atlanta. If it's an NG, it goes to like Kansas City. And you'll have to work with your veteran to figure out their eligibility because they're not showing up in the system. But no, something I want to talk about, VA loans, people think, oh, I bought my first house with a VA loan. Cool. And you sold it? Okay, your eligibility is restored. They don't know that. Consumers don't know that they can A, have multiple VA loans at the same time. They also don't know they can have multiple VA loans throughout their lifetime. Right? I got a VA loan at 20, one at 30, one at 40, and now one at 60. Yep, you can do that. And what's really cool is if you collect any type of disability per the VA, you're also not paying a funding fee. Now, hopefully you're not disabled, right? Who wants to pray to be disabled? Hopefully you're not disabled. But if you're not disabled, you have to pay a funding fee. So if we got out our handy dandy pocket computers, could someone just look up for me right now? What are my funding fees? VA funding fees. You'll have two of them. You'll have one for first time use, and then you'll have one for subsequent use. It's cheaper to use your VA loan the first time. It's a little bit more expensive to use it the second time. So 2.3 for the first,
3.6 for the second,
and 3.6 for the second. Great news. That is not paid out of the veteran's pocket.
if they're disabled.
Well, if they're disabled, we don't pay it.
Oh.
If you're disabled, you don't pay
It
it.
goes back into the loan.
Yep, we actually are allowed to roll it back in the loan. So technically, we're not financing 100% of the purchase price. We're financing 102.3% or 103.6%. Now, again, just understand that there's VA funding fees, and if you're disabled, you don't pay it, because that's a question. Ma'am or sir, you would have to be a veteran of our armed forces, are you? They say yes, you say thank you. They say thank you for saying thank you. Your next question right after that would be, you wouldn't happen to receive any disability income, do you? Right? And before they answer it, because sometimes that can be an opposing question, I purposely won't let them answer. I say, look, the only reason why I'm asking is that because if you are disabled per the VA, then you won't have to pay the funding fee. Like, that's why I'm asking you. I'm not asking you because I care to know about your personal medical conditions or your mental condition. I'm asking because it's going to save you money. And then finally, on the funding fees, please know that they also differ based on your LTV. Just because you're obtaining a VA loan does not mean you have to finance 100%. There are people who want to put money down. There are people who have to put money down. Hey, in order to get your DTI down, I need you to put down 10, 20 grand, 5, 10%. So there's charts that you can pull up that can walk you through your funding fee. No different than a funding fee could be different on a refinance than it would be on a purchase. So just know that VA loans have funding fees unless you are disabled per the VA. That 2.3 and that 3.6, that's like your standard rule of thumb, run of the mill if you're purchasing a property, but that's also assuming 100% financing. So it could definitely differ. Just like eligibility or entitlement differs, right? Like someone who's been active for only a year might not be eligible. Now, if they've been active for a year but deployed into a war zone, then one day, then you're eligible. Someone who's been a reservist for 3 years, maybe not so much. Maybe someone a reservist for 6 years, you are. So there's a lot of moving parts. Again, this is high level. It's a real tricky question. If If you have a deceased veteran, but your veteran had to pass while active duty, not necessarily combat related, but they had to been active military when they passed. If that's the case, then the spouse will have their benefits afforded to them. But if they're both veterans,
Yeah.
no. But the person who's disabled is going to be my borrower, and I'm going to use that person's entitlement, right? Or the person who maybe has never used it before. That way, they're paying the 2.3% and not the 3.6%. I want you guys to run these numbers on your calculator. Okay, so the purchase price is $250. Will you give me the loan amounts for these three scenarios, all the same purchase price? $255,750
Yeah.
is correct. What we did there is we took $250,000 times it by 2.3%. That's the funding fee. Added the funding fee to $250. It's that simple. A plus B equals C. So when I calculate a principal and interest payment, I can't calculate it off of $250. I have to calculate it off of $255,750. Yeah, so I'm not worried about entitlement. They've never used it before, and I got my COE, and my COE says that they have full entitlement. Yeah, entitlement just lets me know how much you're eligible for. Right, which by the way, this is key. I talk about this a lot. There's a huge difference between being eligible and qualifying. Because you will get, and this tugs at my heartstrings, especially younger people in life. Hey, I'm a veteran. Thank you for your service. And I'm going to get a home loan. Okay, cool. I need to take a look at your credit. I need to talk to you about where you work, how much money you make, do a quick DTI calculation. VA is going to require me to look at your residual income. I need to talk to you about closing costs. Oh no, I don't pay closing costs. I'm a veteran. Yes, ma'am or sir, there are actually closing costs associated with your loan. I will not charge you any lender fees, but you have to pay for the VA appraisal. You have to pay the title company. You have to pay the state of Florida. You have to pay the county. You have to pay the survey company. You have to go out and obtain your homeowner's insurance. You have to put 2 months in reserve for taxes, 2 months in reserve for no. I'm like, yes. That's a common misconception. I don't have to. There are certain fees, they're called non-allowable fees, that you don't have to pay, ma'am or sir. You won't be paying them. But there are those closing costs that I just mentioned. They are allowable fees. You will be paying them. All right, well, I'm a veteran. I get a loan. Well, ma'am or sir, you're a veteran. And again, thank you for your service. You're eligible for a loan. But unfortunately, your 575 credit score and your 110% DTI are going to prevent me from lending you money. Let's talk about how we can get your DTI down closer to 50 and your credit score back up to like 620 or 640. You know, like, just understand that when we are helping our veterans, that's going to come up, and that's just a misconception. It's an easy misconception. But Cam, your question about entitlement just lets me know how much you're eligible for. Are you eligible? Like, do you still have your entitlement, or did you lose it? Or did you not serve enough years, to have entitlement? And then, assuming you have entitlement, now that I know you're eligible, I'm just trying to figure out your loan amount so I can calculate a payment for you. This person, subsequent use, $250,000 purchase price. I'm not worried about their entitlement. They're good. Honorably discharged. They did 3 years active duty, 3 years reserves, all well and good. What's going to be my loan amount here?
$259,000.
Yep. And is that 250 times 3.6%? Add that. And then what's the number? 259. Plus an ugly 9.
That's it. $259,000.
Even. Oh, look at that. All right. It's a layup. They're disabled.
250.
Yeah, 250. Tidewater is a bad thing. Okay, if you hear Tidewater and you're doing a VA loan, the Tidewater Act basically states how VA appraisers need to communicate to realtors and veterans about a appraisal they're working on and the appraisal's coming in low. We don't like to hear the word Tidewater because that means there's a good chance that you're going to have a low appraisal. But blue water, I believe, was the act that was passed about 2 years ago. So I'm going to go to my friend Google. And you guys go to yours in case your connection's quicker than mine. Yep, Blue Water Navy Vietnam Veterans Act of 2019. Yep. When that came through, part of that act that was passed by Congress, it increased how much we as lenders could. And it's called bonus entitlement. Yeah, it used to be really simple, Jimmy. Like when it was just based off of the conforming loan limit, it was, especially when, like the world I lived in, the conforming loan limit for the longest time, remember I said was 417. So at that point, entitlement was 104,250. So it's just real simple to work everything off of 104,250. One more tiny little caveat so you don't ever get caught in this mess. Put a red flag and an asterisk around someone with not full entitlement. So you could have not full entitlement because you lost it with a short sale or foreclosure, or you already own another property that's using some of that entitlement, and they're buying a home and the purchase price is under $144,000. Asterisk.
They don't get it.
No, they do, but there's a mathematical formula that you have to follow. Here's what'll happen, because it happens every year. We misinform, loan officers misinform. They have one of their clients who's a veteran who doesn't have full entitlement going out looking at a home, and they fall in love with this cute 2-bedroom, 1-bath house in a rural area, right? Down in Polk County, maybe up in parts of Volusia County, out in Lake County. That's the only place you can find a $144,000 single family home, right? And they think they're going to purchase this with 100% financing. But when you run their math, because the loan size is under 144, you have to follow the VA's formula for determining max loan size. I'm just going to promise you there's going to be a down payment required. And a lot of people who are buying in that price range don't have the down payment. That's why they're utilizing their VA benefits. So just red flag that and asterisk it. Like anything, you should proceed with caution when you're dealing with a veteran who doesn't have full entitlement. A veteran with full entitlement, full steam ahead. Just make sure you do your residual income calculation. It's the only loan program currently that requires it. That requires it. Do not treat it like it's a Fannie Freddie FHA type loan. You gotta think, for a veteran to have their LAP approval, which that's like the designation to be a VA underwriter, that could be a $10,000 or $15,000 annual increase in their salary. They lose that because they started signing off on loans that don't meet VA's requirements. Because you gotta think, every loan that we do is still gonna be audited, whether it's audited by HUD or VA or USDA or Fannie Freddie. True story, we as Waterstone, I originated the loan. We had a VA loan that the VA wouldn't insure. They would not insure it. The reason why they wouldn't insure it is because we had the veteran pay for his WDO, his pest inspection. So a VA loan is one of the only loans that requires a clean termite inspection or WDO, wood destroying organism. Now, we recommend everyone gets one of those, especially in Florida, but VA actually requires that we look at it. The other ones were like, hey, we don't want to see it. I'm just going to let you know, Beth, that you're buying a house in Florida. You should have your home inspected, and you should also get a termite inspection. But I don't need to see the results. VA says we need to see the results, and it used to be, it's not this way anymore, but it used to be the veteran couldn't pay for it. We had the veteran pay for it. True story, the VA reviews our work and says, yeah, we're not insuring it. And we're like, we just lent out $400,000 at 100% loan to value and we have no insurance? Yeah, that's scary. That's actually how our industry operates. So like when an underwriter asks for X, Y, or Z, I promise you it's not because they want it. It's because all we're trying to do is create a product that the street will accept, that when audited, it passes through the audit. If not, I now have a loan on my books, 100% financing, that is worth 60 cents on the dollar. If I'm CFO, I'm Dennis Krieg, and I have to write down that loan by $140,000. Waterstone just took on paper $140,000 loss. Now, we didn't realize that loss as long as our borrower continues making payments. What we did to rectify the situation is I reached out to the guy. said, hey dude, my bad. You paid for this, you weren't allowed to pay for it. I would like to send you a check to reimburse you. Crickets. 2 weeks later, reached out to him again. Crickets. Now I have people calling me from the home office. DO, come on, can you help us out? Like, we don't want to take this huge paper loss. Called the guy, said, sir, I'm trying to give you $100. How if I give you $100 plus a $250 Home Depot gift card? Finally called me back. Yeah, all I want to do is reimburse them.